What do you see as the most likely outcome today?
Yeah, Frank. At Raymond James, we published our most likely outcome is a Republican sweep. That's really based upon our belief that Republicans are very well positioned in the House of Representatives. They need to flip 5 seats. An average midterm election, that's 23 seats. So even an average midterm election should have Republicans doing well in the House. In the Senate, it's much closer, Frank. And we give a slight edge to Republicans based upon kind of some of the momentum we've seen, but it really is a debate right now in terms of, is it a red wave or are we going to see a blue wall of support from Democrats? So the Senate's much less certain, kind of closer to that toss up. I think we'll look back and say, oh, hindsight's 2020, and it was clearly the result. But there's still a decent amount of uncertainty, Frank, in terms of what the Senate makeup will be. And we probably could see this break one way or the other once votes start getting counted later today.
You know, Ed, you mentioned uncertainty. I think there's a lot of uncertainty of what the real key issue for this midterm election is. Obviously, Roe v. Wade's one hot button issue, but there's also a lot of economic concerns. The rising cost of inflation, a lot of middle class and working class people having a hard time making ends meet. Where do those economic concerns rank in the top issues for voters?
Yeah, Frank, we've hosted pollsters at Raymond James, and we've kind of really seen that over the course of the last month or two, kind of economic indicators have really been the top concern of voters. That's part of our analysis. We will see kind of what that actually translates into. We do have a lot of Democrats who are outperforming the approval rating of Joe Biden in this election. And so it is a number of X factors. You mentioned the Supreme Court ruling on abortion. That certainly is going to make up kind of a key part of the outcome of this election as well. So those uncertainties, Frank, are really kind of part of the reason why kind of the vote today is going to be higher than an average midterm election. And I think really the debate there is that normally high turnout has been viewed as favorable to Democrats. But when we look back at the last couple of elections, we've had high turnouts that have been both good for Republicans and Democrats. So a lot of the conventional wisdom of elections have really been upended in the last 2-3 election cycles.
You know, Ed, you took a phrase right out of my mouth, conventional wisdom. The conventional wisdom is that gridlock in Washington is good for the markets. Your most likely scenario would be technically gridlock. It would be the Republicans taking control of both houses, a Democratic president. But in this case, do you see that same trend playing out, that this quote-unquote gridlock will be positive for the markets, or will investors see it that way?
Frank, I think the most important thing for the market is that the midterms will be over. We look back in that on average, the S&P 500 in the last 30 years has been weak in midterm years, and it starts rallying around the first week of October through the end of the year. We look back in 6 months after the election, every midterm election since 1950, the S&P 500 has been up. And so I think what we see oftentimes, Frank, is that we have so many different potential outcomes that we shut down, and the market doesn't like that uncertainty. And once we have an outcome, we can bookend that risk. We can look at what the real issues are. We're going to have a lot of those play out in the lame duck. There's still plenty of things that can get done, even in a divided Congress. We have a debt limit, which is going to be the big market focus mid-year next year. And so from a market perspective, we want this to be over so we can focus on other things.